Hi and welcome to DNB Carnegie in our presentation of Bergman Beving. My name is Markus Almerud. I'm an analyst here at the bank. So we published an in-focus report on Bergman Beving this morning. We have a fair value range of 320 to 400 Swedish krona. There are 3 points I'd like to highlight. Firstly, we do expect a gradual recovery in organic growth throughout this year and next year. Secondly, margins have expanded and we think that this margin expansion will continue. And thirdly, we do see strong M&A pipeline. So Bergman Beving specializes in acquiring and developing niche technology companies in the industrial and technology sectors. It is a so-called compounder. A little bit of history. It was started in 1906. It was listed on the stock exchange in 1976. In 2001, the company was split into three: Bergman Beving, Lagercrantz and Addtech. Bergman Beving changed the strategy and started to integrate forward. It acquired resellers, it built a reseller chain called the Tools chain, but the company was again split in 2017. The Tools chain went into Allego and Momentum Group, and Bergman Beving went back to its roots. It again became what it was when it spun off Addtech and Lagercrantz, and it started to build the compounding again. Looking at the numbers, starting with organic growth, you can see in the graph on the top left-hand side that most of the periods since the split, they've had negative organic growth. There's a couple of reasons for this. First of all, they do have about 40% industrial exposure and 40% construction exposure. These are markets, especially construction, which has weighed at least for the past couple of 3 years. On top of that, they have worked to phase out unprofitable products for the past couple of years, which has emphasized this negative move. This is now behind them, and we have seen the organic growth trend improving for the past 6 to 7 quarters. And we do expect for this to continue. We do not expect for the markets to get worse. Looking at the margins, they have expanded despite the negative organic growth. And there's a couple of reasons for that. One of them is the acquisitions they made. They do make acquisitions with a margin of over 15%. On top of that, they have tight cost control, and the phase out of the unprofitable products have also helped the margin. We think also this will continue. We're looking for 2% sales CAGR and 6% EBITDA CAGR over the next 3 years. Now this is lower than the 15% they're looking for, and that highlights the importance of acquisitions. Looking at the bottom left-hand graph, you can see that the entire sales growth over the past, since the split, has been driven by acquisitions. Looking at the pipeline, it's very strong. They will acquire companies in technology niches with strong market positions where margins are over 15%. Looking at valuation, valuation has improved over the past couple of 3 years and is now trading in line with other mature compounders such as Indutrade, Addtech, Lagercrantz and Lifco. So this is not a valuation case, it's more of an earnings case. So in summary, looking at Bergman Beving, we do expect organic growth to continue to improve. We expect the margins to continue to expand, and we do expect a continuously high M&A activity. Thank you.